Screencast will focus on petty cash funds. So what is a petty cash fund? It is a form of cash control, and it is the amount of cash kept on hand by a business to pay for minor expenditures. It also must be kept secure by a responsible custodian. So what are petty cash funds used for? It's used to pay back employees for minor cash amounts when they've spent their money on items such as office supplies. There's 3 activities. So establishing the fund, making payments from the fund, and replenishing the fund. So establishing a petty cash fund requires you to write a check and cash it for the amount that the fund is going to be. This cash is then placed in the responsibility of a custodian, and a journal entry is needed to record the establishment. So for example, on March 1st, the florist establishes a petty cash fund of $200 by cashing a check. This is then recorded through a journal entry. So journal entries must be dated. So in this case, March 1st. Petty cash is then debited $200 as we are increasing it, and cash is then credited $200 as we are decreasing it. So making payments from the fund. This can be done in 2 ways. Cash can be taken out of the fund and given to employees who are going to buy items that are necessary for the business, or employees can be reimbursed by the fund after they've already made payments using their own money. But in both situations, petty cash fund custodians must collect receipts from employees so expenses can be recorded. So recording must be done through a report. So the custodian, this is when they use the receipts they've collected. So this is an example of the report for the florist. So petty cash's original balance of $200 is recorded here, and then you deduct the amount that is remaining in the fund. This will leave you with the amount of cash you need to replenish the fund. So in this case, it's $110. Receipts must also be recorded. So supplies in this case was $75 and miscellaneous was $35. This totals to $110, and note that the amount needed to replenish the fund equals the amount of the total receipts, which is ideal. So in this case, the florist collected a total of $110 in receipts. Therefore, the business needs to cash a check for $110 to replenish the fund. The cashing of the check and the expenses need to be recorded in another journal entry. So at the end of the month, March 31st, supplies expense was $75, miscellaneous expense was $35. And then these are both debited because they're an expense. Cash was then credited $110, as this is the amount of money needed to replenish the fund. So sometimes the receipts don't always equal the amount that the account has decreased by. This can be as a result of the custodian not receiving the right change or not receiving all the proper receipts. If it's not a big difference, it's not really a big worry. So the difference is then recorded in an account called cash over and short. For example, if the custodian of the florist's petty cash fund receives receipts for $110, but there was only $88 left in the fund, there is a discrepancy of $2. This $2 difference will be recorded in the cash over and short account by debiting $2 as an expense, which will then increase the amount of cash needed to replenish the fund from $110 to $112.